you hear me? Can you hear me? Good morning. Good morning. Can you hear me? Can you hear me? If you can hear me, I want to see your comments. If you can hear me, am I audible? If you can hear me, please drop your comments. Type yes in the comment space. Good morning. Welcome you to another wonderful, beautiful, and a profitable trading day. How has it been this week? Today is Wednesday. How was it on Monday? How was it yesterday? I hope it's been profitable. Though price has been in the range on most of the major currency pairs, and that's because CPI will be released tomorrow. It's CPI that is holding USD pairs at the moment. That's why you'll see most of the USD pairs have been in a range. CPI will be released tomorrow. And today, Wednesday, July 10, I think we just have one major news from the United States to be released by 3 p.m. 3 p.m. Fed Chair Powell testifies by 3 p.m. So by 3 p.m. we should expect high volatility in the market. We should expect high volatility in the market. Okay, so that's the only major news for today's market. Okay, so let's go to the charts now. Before we look at currency pairs, I want us to look at the DXY index. Dollar index is used to determine the strength of the dollar. If dollar index is bullish, it indicates that the dollar is bullish, and if dollar index is bearish, it indicates that the dollar is weak. Okay, if dollar index is bullish, it indicates that dollar is strong, and if dollar index is bearish, it indicates that the dollar is weak. So so on DXY, let's start with the daily time frame. Let's see how yesterday candle closed. So you can see at this point, that was on Monday, the candle closed as an hammer, right? A bullish hammer. And yesterday also was bullish, right? So with this pattern on the daily time frame, I think the dollar is bullish at the moment. Dollar is bullish at the moment. That's my take on DXY. Dollar is bullish at the moment, so we would be considering selling GBP USD, Euro USD, Australian dollar USD, because the dollar is what is bullish. But at the moment, you would see Euro USD, GBP USD, and Australian dollar USD are bullish. Why? CPI. That's the reason those pairs are bullish at the moment. Normally, if DXY is bullish, GBP USD, AU, EU should be selling. But if you look at the chart right now, they are bullish. Okay. So let's see GBP USD. Let's start with GBP USD. Okay, so GBP USD daily, yesterday candle closed. It closed bearish, right? Yeah, yesterday candle closed bearish. Monday candle closed as a shooting star. So what we have here on the daily time frame is a bearish reversal pattern. It's a bearish reversal pattern, but GU is not set for sell. It is not set for sell. I think after the formation of this shooting star, the formation of this shooting star on Monday, I think a fair value gap was created, and I think GU wants to go fill that gap before going bearish. So let's identify the fair value gap on 4-hour or 1 hour time frame. So you can see we had a fair value gap here. So I think this is where GU is heading to. Okay, though it got filled yesterday. I think yesterday the gap got filled and there was a strong rejection from that level. Now this high, the high of this candle is an area of liquidity, right? It's an area of liquidity. A lot of retail traders would have executed sell after the formation of this candle that looks like a shooting star, right? A lot of retail traders would have executed sell. And where would they have their stop losses? Their stop losses would be the high of this candle, or the high of this shooting star candle. That is where stop losses. So I think that is where GU is heading to at the moment. That's where GU is aiming for, to clear liquidity. Once liquidity is cleared at these highs, then you could look for sell opportunity on GBP USD. And I think this will play between today and tomorrow. it's likely going to play out between today and tomorrow. Probably CPI would make GBP USD, Euro USD, and AUD USD crash. Okay, so that's my take for GBP USD for today's market. I am bullish on GBP USD. I am bullish on GBP USD. So if you decide to take this trade, your stop loss will be few pips below the low of this candle, say 10 pips below the low of this candle. That will be 1.2767. That will be 30 pip risk. 30 pip risk. Now, if you're risking 30 pips, what is the potential reward on this trade? The reward will be from 2796, and we are aiming for 2825. That's like 30 pip reward. That's one to one. That's one to one risk reward, which is very poor. The risk reward is very poor. Okay, but if you're okay with it, you can go ahead and execute the trade. Okay, you could set your stop loss 30 pips, then TP, you could use 40 pips as TP. Okay, and when the risk reward on a trade is very low, once the market starts going in your direction, you should trail your stop. Okay, so for example, if you're taking this trade and you are in profit of, let's say, 20 pips, let's say you've made a profit of 20 pips, what you need to do is to adjust your stop loss to 10 pips below your entry price. Are you getting me? Are you getting me? That's what you should do when the risk reward is very poor. You need to ensure that as the market starts moving in your direction, you start reducing your risk on the trade. Are you getting me? So that's my take on GBP USD. I hope that is clear. I hope that is clear. Why is chat disabled for this live stream? Why? You guys can drop comments. Okay, I don't know why chat is disabled. Why? Okay, so I'm not sure you guys can comment. Right? You guys can't comment. You guys can't comment. Okay, so let's look at the next pair, gold. I currently have a trade on gold, which is in good profits, as you can see. I used 0.1 lot size on this trade, and I was in profit of 120 pips. Yeah, 120 pips. So I had to close 50% of my profit. 50% of my profit. So at 120 pips, that was like $120. So I closed $60. Okay, $60. That's 50% of the $120 profit. Okay, so, and I've adjusted my stop loss to my entry, even few pips above my entry. You can see my entry and my stop loss. You can see it. So if this trade decides to pull back, I would not lose on this trade. I would not lose on this trade. I've already closed 50%. I'm already in profit. Okay, so my bias on gold still remains bullish at the moment. My bias on gold still remain bullish. I would only consider selling gold if the current 4-hour candle closes bearish. I would only consider selling gold if the current 4-hour candle closes bearish. But at the moment, I am still very bullish on gold. I'm still very bullish on gold. Okay, I'm expecting gold to pull back to a premium level. So let me apply my Fibonacci tool from this swing low to this swing high. So I'm expecting gold to pull back to a premium level. It's currently at equilibrium, and that is the reason for the pullback. You can see price is currently at equilibrium. So we might see price pull back or range for some time, right? Because price is at equilibrium right now. It's at equilibrium. But I'm expecting gold to pull back to, I think we have a fair value gap around this area that needs to be filled. So I'm expecting gold to pull back to this area. But if the current 4-hour candle closes bearish, then I might consider selling gold. I might consider selling gold if the current 4-hour, I think by 3 p.m., yeah, no, by 11, yeah, by 11, this candle would close by 11. Then I could change my bias from bullish to bearish. But at the moment, I am still very bullish on gold. I hope that is clear. I hope that is clear. I hope you guys can hear me. I hope you guys can hear me. Okay, let's move to the next pair. Australian dollar USD. Okay, nice one on Australian dollar USD. Let's start with the daily. Let's start with the daily. You can see Australian dollar USD has been in a range since Monday. On 4 hour, you see it clearly on 4 hour. Since Monday, you can see Australian dollar USD has been in a range, and that's because of CPI. The institutions are waiting for CPI data to be released before they will inject their millions of dollars into the market. That is why price has been in a range. They are waiting for CPI data to be released. Okay, so price has been in a range. Now, what's my expectation on Australian dollar USD? For today's market, like I said, my bias on Australian dollar USD is bullish. Okay, before CPI, I believe all this liquidity that has been created, these highs will be cleared. All these highs is likely going to be cleared. Okay, it's likely going to be cleared. That is my take on Australian dollar USD. That's my take on Australian dollar USD. Okay, so if the current 4 hour candle, if the current 4 hour candle closes bullish or closes as a doji, I would consider buying Australian dollar USD. If the current 4 hour closes as a doji or an hammer, I would consider buying Australian dollar USD. Let's go down to 1 hour time frame. Let's see the pattern we have on 1 hour. Okay, so you can see the previous 1 hour candle, you can see closed as an hammer. It closed as an hammer. After sweeping, did it sweep liquidity here? Okay, it didn't sweep liquidity at this low. Okay, it closed as an hammer. And hammer indicates change in trend from bearish to bullish. Okay, I think it cleared liquidity at this previous low. Now, before you jump in and start buying, let's see the pattern on 15 minutes time frame. 15 minutes must be in agreement with 1 hour time frame for us to buy. Let's see what we have on 15 minutes. So you can see on 15 minutes we had an hammer here. This is a bearish hammer. The next candlestick has closed bullish, right? So this is a bullish reversal pattern on 15 minutes. Okay, this is a bearish reversal pattern on 15 minutes. But before you buy, this is my advice. Before you buy, let me go down to 5 minutes. Before you buy, hold on. There should be a shift in market structure on 5 minutes. There should be what? A shift in market structure on, on 5 minutes. So the shift in market structure on 5 minutes would occur here because this high, the high of this shooting star is what engineered the sweep of liquidity. Can you see the sweep of liquidity on 5 minutes? This you buy, before you buy, wait for price to pull back, okay? Wait for a candle to close above this high, preferably a 5 minutes candle or 15 minutes candle, okay? 5 minutes candle, 15 minutes candle. Now, if you look at 1 hour time frame, 15 minutes time frame, and 5 minutes time frame, you can see that these 3 time frames are in agreement. The 3 time frames are in agreement. On 1 hour, it is bullish. On 15 minutes, it is bullish, and on 5 minutes, it is bullish. But before you jump in and buy, just level. Your stop loss should be few pips below this level, maybe 5 or 10 pips below this level. That's my take on Australian dollar USD. Okay, that's my take on Australian dollar USD. And if you are buying from above that level, your take profits should be the highs. Okay, you could set your TP at this high, your first TP. Okay, your first TP should be at that high. That's about 30 pips from the current market price. So if the potential profit you can make on this trade is 30 pips, your risk should not exceed 20 pips. Okay, your risk should not exceed 20 pips. If the potential reward that you can make from this trade is 30, then your risk should be 20 pips. I hope that is clear. That is my take on Australian dollar USD. I'm very bullish on Australian dollar USD. Okay, let me just check the daily time frame. Let me see the pattern on the daily. Okay, so yesterday candle, as you can see, it's close, looks like an hammer, right? It looks like an hammer. Yesterday candle looks like an hammer, bearish hammer, bearish hammer. If today's candle closes bullish, then we should expect Australian dollar USD to be bullish. Okay, only CPI. If the CPI data comes out positive for the dollar, then we should expect bearish move on buy. I hope that is clear. I hope that is clear. I hope that. What's happening? I'm not seeing your comments. Comment has been deactivated. Okay, it's okay. So, which other page do you want me to look? You want us to look at? If you're on the WhatsApp group, you can drop your comments on the WhatsApp group. If you're on the WhatsApp group, if there's any page you want us to analyze, just drop your comments on the WhatsApp group. I'll check it out. If there's any pair you want me to analyze, drop it on the WhatsApp group. Um, Euro USD is also bearish. Let's just see the charts. Sorry, Euro USD, sorry, is bullish. Okay, it is bullish. Yesterday candle closed bearish. After the close of yesterday candle, it closed bearish. What's the pattern? You also notice that we had a resistance here which became a support. This resistance you can see. So yesterday tested, you can see it tested this support level, and there was a strong rejection from that level. You can see that there's a rejection from that level. Let's go down to 4-hour time frame. Let's see the pattern that formed on 4-hour time frame after the close of yesterday candle. So you can see the pattern we had on 4-hour. This is a bullish reversal pattern, right? This is a bullish reversal pattern, right? We had a spinning bottom, then an hammer, then followed by doji. These are reversal patterns, bullish reversal patterns. Okay, so my bias for Euro USD is bullish. Okay, it is bullish. You could set your TP. They are likely going to clear liquidity at this previous high. They are likely going to clear liquidity at the previous highs. That's my take on Euro USD. My bias on Euro USD at the moment for today's market is buy, buy, and buy. And if you have, please set your stop loss. Set your stop loss. Okay, few pips below this level. Few pips below this level. Okay. So that's my take on Euro USD. That's my take on Euro USD. Which other pair? Which other pair? Euro Australian dollar. My bias for Euro Australian dollar is bullish. Okay. For the week, my bias is bullish for Euro Australian dollar. Okay. For Euro Australian dollar is what? Is bullish. It is bullish. Okay. Let's see 4-hour. So you can see the pattern we had on 4-hour. This was an hammer, right? This was an hammer. Then the next candle closed bullish, right? The next candle has closed bullish. So this is a buy setup. This is a buy setup on Euro Australian dollar. So Euro Aussie, I am bullish. I am bullish on Euro Aussie. I hope that is clear. Let's look at GBP JPY. Like I told you guys, GBP JPY is still bullish. I shared that with you guys on Monday that GBP JPY is still very bullish, and it's been bullish since Monday. It's been bullish since Monday. GBP JPY is bullish. The CPI data that was released for JPY this morning was negative. It was negative. So the Japanese yen is weak. Technically and fundamentally, Japanese yen is weak. So GBP JPY is still very bullish, but I wouldn't advise that you jump in and start buying GBP JPY. Buying at the current market price is at a very high risk. It's at a very high risk, so I wouldn't advise. GBP JPY is likely going to pull back anytime soon. Anytime soon. It's been bullish for a long time. It's been bullish for a long time. So entering a buy now is at a very high risk. Okay, very high risk. If you're comfortable with taking such risk, you can go ahead. Okay. you can go ahead. If you are buying, your stop loss should be this low. Okay, and that's about 200 pips. The risk is about 200 pips. For me, that is too high. That is too high. That risk is too high. I don't take such risk. Okay, but if you are okay with taking 200 pip risk on a trade, you can go ahead and execute the trade. That's my take on GBP JPY. I hope that is clear. Which other pair? USD CHF. USD CHF. Okay, my bias for USD CHF this week is bullish. It is bullish, but considering how yesterday candle closed, you can see it closed as a spinning top, right? It closed as a spinning top, and after the close of that spinning top candle on daily, what pattern do we have on 4 hour? Let's see the pattern. So you can see the pattern we had on 4 hour yesterday, bearish reversal pattern from this point, right? It's a bearish reversal pattern. We had an hanging man, then the next candlestick closed what? Closed bearish. So this would have been the best entry for sell on USD CHF. That would have been the best entry. Okay, so it's likely maybe a fair value gap was created. The pullback we're currently seeing in the markets. Let's see 1 hour. See 1 hour. No fair value gap on 1 hour. There's no fair value gap on 1 hour. There's no fair value gap on 1 hour. Okay, okay. We had a very, you can see this value gap. So it's likely wants to fill this fair value gap. Can you see the gap? Okay, likely going to fill this fair value gap. Yeah. So it's likely wants to fill that fair value gap before going bearish. So for today's market, I am bearish on USD CHF. For today's market. Okay, I am bearish on USD CHF. I hope that is clear. I hope that is clear. Let's look at one more pair before we end today's session. I'm sorry guys, I can't see your comments. I think comment has been disabled. Okay, I'll fix that after the class. Can't see your comments. So which other pair? Let's see, USD card. Okay, USD. So as you can see, USD card is bearish at the moment. It is bearish at the moment. You can see USD card has been in a range since the 5th of July. USD card has been in a range. It's really been a difficult time for traders. Since the 5th, USD card has been ranging. And that's because of CPI. So to trade a ranging market, what you need to do is just identify the high of the range and the low of the range. So it's either price breaks out from the high or breaks out from the low. If it breaks out from the low, you might consider selling. If it breaks out from the high, you might consider buying. Okay, but if you look at the pattern we have here on 4 hour time frame, okay, you can tell that the trend, this is a bullish reversal pattern. Okay, so our focus should be breakout from the high and not from the low, right? Because the pattern on this 4 hour time frame is a bullish reversal pattern. So we should be focused on breakout from the high for us to buy. Okay, so the pullback, price is likely going to pull back maybe to fill this fair value gap. There's a fair value gap here. Okay, so maybe price will just want to come and fill this fair value gap before going bullish. That's my thoughts on USD card. Wants to come and fill this. Can you see this fair value gap? Yeah. So it's likely going to come fill this fair value gap before going bullish. That's my take on USD card. So if you are selling USD card, your stop loss should be use this high, the high of this candle, or a few pips above the areas are areas of liquidity. Okay, all these areas are areas of liquidity. So your stop loss should be maybe 5 pips above the high of this candle, 5 pips above the high of this candle, and your TP should be at this level or a few pips below this fair value gap. few pips below this fair value gap. If you consider the risk reward on this trade, it is very low. It is very low, and if your risk reward is very low, it's better you skip the trade. Just keep the trade, okay? If the risk reward is very low, USD card, the risk reward is very low. So I think that'll be all for today's session. Any question? I can't take your questions because chat has been disabled. Okay, so I appreciate you all for your participation, and I wish you all a profitable trading day. Okay, wish you a profitable trading day as you trade. Please ensure you apply stop loss, apply good risk and money management. Don't over leverage. If you over leverage, you will blow that account. You will blow that account if you over leverage. Okay, before you execute a trade, know the right lot size to apply on the trade. Don't just click the buy or sell button without knowing the risk on the trade. That is the major reason people lose their money. That is the major reason people blow accounts. So ensure you do the needful, do your proper analysis before you execute the trade. Once again, I appreciate you all for always showing up for the classes. And I think today is Wednesday. Okay, we'll be meeting tomorrow 10 a.m. Do have a wonderful day.